Tiffany. Here's your first lesson on trading. I'm gonna just give you kind of off the cuff experience here, something that you can always refer back to. I've got many different currency pairs I can trade. Euro over the dollar, US dollar over the Swiss franc, British pound over the US dollar over the yen, Australian dollar. Those are the main ones. So let's get right into it. This right here, this chart here is a British pound. This is a daily chart, as you see here. The trend here, down, down, down. You know, consistently down. Anything that gets a high happens, they take it down. Another high comes, they take it down. So you get consistently lower lows, lower highs. That's a trend. So you probably want to be selling on these days. You want to be looking for selling opportunities, and not necessarily every day. Now this day here, bucked the trend, went up. This day here, bucked trend, went up. So the white ones are white candles. So all a candle is just, it indicates when the market started out to this one here. So this is where it started at this price level. It came down to this price here during the day, but it started at this level to start the day, and the days start at 7 o'clock Central Time, and here's how it finished the day at this level. So it did finish up, and being it did finish up, it did finish as a white candle, a bullish candle. I know I'm throwing a lot of stuff out there at you, but it's just, it means it was an up day. It went as high as up here, tested the highs, in fact went just beyond them, just a hair. But the smart people were selling, obviously, right there. Next day, down. Next day, down even farther. Now we got new lows going here. So that's what you're thinking when you're trading. You're thinking about highs and lows and the trend, because that's how you make money. If you understand the trend and how to capture a part of that trend, that's how you make money. So, you know, you could see this thing starting to fall off here. It's declining, you know, right? I'll get into these moving averages, the reason I use them here. This is a 3 moving average. This is a 6 moving average. This is a 10 moving average. This is a 21 moving average. And you have those on the daily charts. You have them on all the charts, all the 4-hour charts, the hour charts. This is a daily chart because each one of these candles is a day. Now if we move to the 4-hour chart, each one of these candles is a 4-hour period of time. But here you can see a series of higher lows. So you want to be buying. Look what happened when it crossed the red line here. We had a bigger move up, and then if we had been patient and seen that this one closed above it with the blue line above the red, that is a trigger signal. That means you can either take it, take the entry, that is, get in the market, or wait for an opportunity. Now you might have waited a couple hours for this, you know, an hour. But when you saw that coming down here, approaching that red line, I would have bought. You had support here because of this line here. You don't have to know all these lines mean. It's just they're basically helping you mark support and resistance in the market. Support is, you know, buyers are coming in at this levels here because they think it's worth buying. Sellers are coming in at these higher levels, these resistance levels, because I think it's overvalued at this particular time in history. So that's how what you're looking for. You're looking for opportunities. Here you see that it crossed above the blue, above this red line here, and it closed at the high of the candle, almost the high for that period. So we've got strong buying going on. Now we got a sell-off here. That's a buying opportunity. You want to take it. I just want to get across that this is something you will see many times over, many different patterns of charting like we're talking the 4-hour chart now. You're going to see that in hour charts. See how the blue, how it crossed there? Now see how it took a long time for it to dip down here? It can take hours sometimes for it to get down to a better level. So there's times when you really want to get in right away too. You don't want to get, let it get away from you too far. So that's why I tend to use half-hour charts. Look for opportunities here. Now look at this. Closed above it, the blue line. So you that kind of, yeah, we're looking at buying here. It's kind of a gradual climb up here. So yeah, buying is going to be a smart idea. Now, here's an opportunity. It came down, came all the way down to here. I would be buying in here. I'd be buying in here. I'd be buying in here. It's just a few points here. It's no big deal. I would put it in a stop here, and that's what I'm getting at. When it comes to placing orders here, you just click the mouse, the right click, and unfortunately I can't show you orders because the market isn't going right now here, but we'll catch that in the next lesson here. But the point is you'd be buying here. Now if you wait it a half hour, an hour away, we're at new highs. Waited another half an hour and a half. We hit some pretty good highs here. So I'd be thinking about selling right in here even. I mean, you don't have to get every dollar there, but I mean, you're doing pretty good if you see it busting here. Let's say you even just took, even say you got here the high here. It closed 98, 65, 98, 1.65, 98. And you would have bought in around here, 65.81. You're looking at 15, 20 points in an hour and a half. That's pretty good. If you're getting 15 points in an hour and a half, you made a good trade. It's a safe. You can make more, yes, but hardly ever. So that just trying to give you a brief idea of what you're looking for, why you would buy it, how you would hang in there. You'd wait till it takes out this high in this case, and there's a lot of times you wouldn't wait. You just be conservative and take it. That just comes with a lot of feel, a lot of experience. The British pound is very volatile, so there's always ways to make money at it. So if you rode this blue line, you just wait until this blue line crosses this red line again. You would have got out about here, which would have been the same thing as being in the market for an hour and a half. So, but that's how you look for trades. And when it closed below this blue line, crossed below this red line here, and it did, it ended firmly. It went back up. What did it do? It touched this red line. So that's the pattern I wanted to. You want to see that pattern. When you see that, you want to be selling right there, or you want to be buying right here. Or in this case, dip way below it, but this would have been another opportunity. But that's what we're looking for. We're looking for a close below with the lines crossing. We're looking for a retrace, a price. I call it a price pullback. In this case, you're looking for a higher price. If you're buying, you're looking for a lower price, a better price. That's the easiest way to say it. You're looking for a better price. If you're selling, you want to get as high as you can. If you're buying, you want to buy as low as you can. Pretty much just like if you were buying and selling something off of eBay. If you're selling it, you want to get as much as you can for it. You'd be selling as high as you could. If you're buying it on eBay, you try and get as low as you could. Marketing, trading markets, the same thing. So the British pound over the US dollar, it's valued at says here 1.6592. That means 1 British pound equals $1.65, or almost 66 cents in this case. It's almost up there. So that, to give you an idea, so 1 British pound equals $1.66. If you went into a bank in England, you give them $1.66, they'll give you 1 pound. So obviously we had their dollars worth more because we have to give them more of our dollars to make it equal. So you get a real good feel how that all works. And but I don't want to get too deeply involved here. I just want to give you a few basic what you're basically looking for. No matter what you're trading, you're looking for the same thing when you use this particular template that I use here. But I use this blue crossing the red every time, and I'll guarantee you, if you follow the rules and you're going 4 out of 5 times, you're going to do good. Now you got to pick the better opportunities. You know, when you start getting into this stuff here where it's you don't know what it's doing here and it's not worth trading, you just stay out of it. This shows that there's not too much volatility here. See, but you got to be ready for when volatility does explode. And with this gradually building here, these lines narrowing, it's just a more advanced lesson there. But you'll start to see that stuff happening. You'll start expecting breakouts. Something's got to give. That's any market. You know, there's always a point where the buyers start piling in, or the sellers start piling in. So that's these points here. So that's it's changing from selling to, or from buying to selling now. Or here it's changing from selling to buying. And I think you get it. So I probably overstayed my welcome on this, but I just wanted to give you a quick little lesson here. See what you think. If this is something you like.